Over the last 4 months, we've consistently seen the value of lending to investors increase. It didn't increase all that much in the latest data to August, but did step up slightly. It's still well below where it was at its peak, but we are seeing obviously that there is still demand from investors out there in the market. And now that the lenders are growing their mortgage book to investors well below 10%, they actually have the scope to lend more to those investors. I think the interesting thing will be, though, that a lot of lenders have pulled back from lending to people who are earning their income offshore. And it's still pretty early days, but what sort of impact will that have on demand for the investor segment? And I think that's probably going to mean that we're not going to see a rapid further increase back up to those levels of investor activity we were seeing sort of 12, 18 months ago. I think at this stage it'll be a sit and wait, and if they do intervene, you probably won't hear about it. It'll be more behind closed doors with the banks. I don't know that they'll be as vocal and open about it as they have been in the past. But I think obviously there's some good reasons why investors are still attracted to the housing market. Yields are at historic low levels, but obviously if people are using equity, the yield's a lot better than what those headline figures would suggest. And when you factor in the capital growth that people are still getting in markets like Sydney and Melbourne, then it's pretty hard to find other asset classes returning as strong as Australian housing. So there's still the demand out there, but obviously as this growth cycle continues to run, as affordability deteriorates, particularly in Sydney and Melbourne, I think it becomes a little bit harder for investors to actually enter into the market. Yeah, well, Sydney and Melbourne are still really strong. So over the last year, we've seen values in Sydney up 10.2%, Melbourne up 9%, but we're starting to see some of the other capital cities picking up as well. So Canberra values have increased by 9% as well over the past year. Hobart's seen growth of more than 7%, Adelaide 6%. Brisbane, not too much growth there, 3% over the last 12 months. And then you obviously look at the other capital cities, Perth and Darwin, you're still seeing values fall. Both of them have seen declines of more than 4% over the last 12 months, and they're both now down more than 10% from where they were at their peak. So whilst the headline figures tell you it's a strong housing market nationally, when you look regionally into what's happening, it's quite different. I think probably the main point to make, though, is the rate of growth in both Sydney and Melbourne has slowed from where it was 12 months ago. But I wouldn't say that means that the growth is necessarily that slow, because you're still seeing Sydney growing at a double-digit rate, Melbourne still growing at 9%, and this growth phase is now almost 4.5 years long.